And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, making expert advisors for the MetaTrader 4, MetaTrader 5 platforms, and just in general becoming a better trader. I've got a lot of stuff that's happened over the past week. Well, first, this is the Weekly Forex Lookahead. That's where we're going to take a 30,000-foot view of everything, as it's called. Also, don't forget to check out Michael Boutrose's weekly technical look ahead, which is one of the best technical videos out there. He's with Forex.com, and Forex.com does not pay me to say that. I say it on because I've been watching him for 10 years, and it's an outstanding video to start off the week. It gives you some direction on what the technical indicators and technical levels are. So we will see what happens with that. But I would definitely recommend checking out his video tomorrow morning. Let's see. Other than that, we've got a lot of things that happened last week, and a lot of things that are going to happen this week. And I'm also joined by Henry, the Forex Trading Parakeet, who is on my shoulder and wants to put in his 2 cents worth. What are you doing? Okay. So let's go ahead and get into, he's spiking out the sound too. He needs to stop that. So with that, let's go ahead and get into what happens when you lose money to Forex, which is called risk. So we're going to do that right now. This is what this means. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade the funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of leverage and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we are looking at today. First, let's talk about me a little bit more. I was going to get this indicator up, but I'm going to get it up right after the video. But this is go over here, and there I am. This is my MQL5 platform that I have here, and here we have my activity here, and I need to get some more activity up there. We've got an indicator coming out shortly. Literally shortly. That's going to be a free indicator, and I'm thinking about turning these all to free too, because they're not doing as well as I wanted them to. They're also not trading as well as I wanted them to either. So I think they may not be worth the $97 USD price. I think I'm going to take them down to free, but you can download them for free and play with them right here at the free demo button. You can do that for MetaTrader 4 or the MetaTrader 5 version. There's MetaTrader 4. Here's MetaTrader 5. Let's go to my screen again. Let's see how many downloads we have on there without even advertising them. I do have, well, I mean, outside of this video, we do have 9 and 6 downloaded so far. So a total of 15 downloads. So that's kind of fun. You can't see Henry because I've got a green background behind me, and he is blue-greenish, and he's yellow and blue makes green, so that's why he's not showing up on my shoulder. But that's what that chirping noise is. You need to stop it because he's spiking things out. Okay, so let's see what happens after that. After that, we got Trading Forex for Profit. This is my my website. First thing that you can do is sign up or log in. If you go back to the first thing that you do is sign up for free, start for free, and you just click in there and start for free, or do what I do, since I already have. Where'd he go? Went somewhere else. Oh, well, good. You can come down here to where I am and log in, and then you can see all the goodies that you get. This is where you load your accounts. You've got to have one account to play, or at least a demo account that you can put in here and play with. You can set up a demo or a free account, or a trading account, a live account as we call them. Include your account activity here with deposits and stuff like this, or just go in here and import your current trades. You first need to build a CSV table for those, a CSV file for those, and get that uploaded. You can do it. You can build one literally with copying, pasting information into sheets at Google and then downloading it. I should do a video on that to show you how to do that for MetaTrader 4, MetaTrader 5, and DXTrade. That's the only platform that's available for the United States if they don't offer CFDs. So that's the conundrum that I'm coming up with on prop trading for in the United States. I think Apex Trading may be one of the only firms available, and that's only for futures. So we may be taking a hard lean into the futures contracts in the commodities world soon on this channel. Who knows? We'll see. Because that is apparently where the money is, judging by the girl that's driving the Ferrari on Instagram. That would be Taylor, not Taylor. Name's not Taylor. What is it? Tori Trades. But I keep an eye on her too to see what she's up to, and she's driving around a Ferrari in Nashville, Tennessee, where I wasn't born there, or where my family's from. But at any rate, you can also map out your performance and see what's going on. I need to update mine because I've got a couple of trades in there that make this performance look even better, look a little better than minus $692, because that's what made me build this site. I want to turn this around and become a better trader. Map out your strategies here. Then we have the other things, pairs you can trade, and then we have billing right down here. We have the free version, which is if you like to come in and just check it out, kick it around, see what you think. If you are happy with it and like to see it get better, then we've got the pro version right here, which is with unlimited accounts, and you can log in your trades once you have an account. You don't have to import trades. Count activity, and then here's where you can counts. Where do I love my trades? Trades cup. Oh, journal. There we go. Here's the trading journal. Just turn this and turn a planned trade or a missed trade of the two versions we have right now. If you've sat on your hands and did not trade, and then the market took off, you had a feeling it was going to take off but did not trade, and then you missed a trade. I've got one right here. The pound JPY at 217.87. I missed it because I was just hesitated too long and missed my entry, which is good because, as we'll talk about later, that was definitely not a long-term trade. As you can see, it's just 80 pips or so, 70, 80 pips. That was not going to sustain. Here we have the, oh yeah, I didn't talk about this. As you can see, I've been working hard this morning on getting some more E8s up. I started this new one, which is a vol squeeze machine learning breakout. And then we have the down here, the FIBO trend continuation EA. And then down here, I've got the key level machine learning filter. So that's both of them are working. They are in forward testing. The Vault Squeeze ML breakout is a new one that we're just coming out today. Just posted it for the first time today. So we'll see how that goes as that develops. Just about ready to start the research on that one. Using Python and machine learning. So with that, without further ado, let's go ahead and get into the charts of what we're talking about today. I think I've talked about everything I like to talk about besides the charts. Now, I am not, if I say something about this looks attractive or something like that, that does not mean jump in with both feet. That means it is my opinion and only my opinion. Do not take it as trading advice. So with that, let's go ahead and get into this. We have Bitcoin. Why not? Let's start at Bitcoin. I have a new indicator in here too, which is AutoFibs. I think it's AutoFibs. Yeah, it's AutoFibs showing the different support levels and resistance levels, pivot points and stuff like that. The weekly pivot point up here is we're way up here at 97, but it keeps bouncing off of this 068, 0612 level. So we're going to probably see further to the downside of that. And after that, your next pivot point down here is way below down here at 45. So we'll see if Bitcoin can keep up. Right now, it is selling off today, which is not a good idea or good indication of what's to happen. Well, for that, that's us up 330%. However, we do not have a new candle yet, so we'll see what happens. What's going on with that? For the day, it's up. For the week, it is down for last week. So we will see what happens with that. We also have FIBO timeframes too, which is kind of interesting. Not as familiar with those as I probably want to be. And then that adjusts automatically, I think. I did not create that, by the way. So with that, let's get into the hot topic for today. Look at that go. That is the US 10-year. We're going to be approaching the 2025 high daily close soon. And after that, we have a 2023 high daily close, which is way up here, which is when it was just raging. Close to 5%. So we're having an increase in bonds, increase in almost everything. We do have kind of a weird head and shoulders pattern forming there, but it's not. This leg is kind of stretched out. I don't think I'd call that a head and shoulders pattern. And also because the levels are not equal, or close to equal, not close enough to equal to call it a head and shoulders pattern. However, we could probably expect the U.S. Interest rates to go up because we have this calamity going on in Japan right now where they have started an intervention, a currency intervention in their bond market. So it has them topping out with their 10-year bond yield at 2.79%, which is kind of perking up a little bit more. A lot of people are calling it the reverse carry trade. This is not the reverse carry trade. I'll show you why. Because this is what is actually the dynamic behind this is that the BOJ is going to be selling U.S. Treasuries and then buying Japanese bonds to invest in their currency. The U.S. is going to be doing the same thing, selling U.S. Treasuries and buying Japanese bonds to invest in their currency to make sure it doesn't go splat, their entire economy doesn't fall apart. With that, that is going to make the U.S. 10-year yield and all the rest of the yields go up, and the Japanese yields go down. What does that mean? That means this is not a reverse carry trade event. This is a bond crisis event. This is what we're talking about. This is the U.S. Yield is going to go up. Japanese yield is going to go down. It's actually going to make the carry trade look more attractive. And the same thing going on in Great Britain. Except I probably can't get that to work for some reason because it just doesn't want to. So at 5.05%, it is still going up at the same rate that the Japanese one is because they're going to probably be doing the same thing in order to save the Japanese economy. With that, because it's common sense. You can't, no government can sit there and spend 2.3 times, 2.5 times what they take in as in tax revenue and expect everything to be okay. Well, imagine if you did that. Let's say you make $100,000 a year and you spend $250,000 a year every year for 10 years. It's not going to work out well. It's just a modern monetary theory is what this is, and it's just a crock of crap, if you ask me. And I don't understand how, it's easy to get ego-driven politicians to just spend money they don't make. That's easy to do. It's just an excuse to get politicians to to destroy the economies of various Western countries, if you ask me. I don't think it was even a ploy there. Enough said about that. That's strictly my opinion, but sit back and watch and see what happens. Here we go. Pound versus the euro versus the Great British Pound. Euro starting to struggle against the pound. Big wicks on top of those. Big drives and then big pullbacks. It's ideal for daily trading in the markets, but you want to make sure you get out when you get out. To stay out after you get out, because don't think that you're going to sit there and make good things last forever, because it's not. And especially in Forex, you get in, get out, get in, get out, get in, get out, almost scalp. Here's another big trigger. What's going on? Look at that. The DXY sharply down 99.8 on Friday. We had the non-bond rate, the non-hike happened there, and the other the Japanese currency event taking place there. So we're probably going to see this drop back down to around 96. Is where I would expect it. That's the bottom on that. We have another stop right here at 97.73. Could stop there. We've got another stop here at 99 proper. That would be right back in this old range right here that we had at the beginning, before the Iraq War. So we'll see what happens to that. And oil prices could be driving the Japanese move too, because they're a 100% oil producer, oil importer. Euro versus the dollar, spiking on the DXY. It is the largest component of the DXY, being 56.7%, I think. So that's going to spike on the decline in the DXY. Pound versus the dollar, also look at that bear bullish engulfing candle. Could see more of a run on the pound versus the yen. We'll certainly keep our eyes open for that. Dollar versus the Swissy, sharply lower. That is almost a bearish engulfing candle. It's almost equidistant candle. So again, if you're going to expect if the U.S. is about to buy a bunch of Japanese bonds and sell to U.S. Treasuries to do it, then that is going to drive the dollar versus the Swissy lower. If they do not, then they're going to be exacerbating the U.S. debt, which is approaching $40 trillion. And if you can stack $1 bills $1 trillion $1 bills and hit the moon. Imagine that means you can hit the moon 40 times. It's 226,000 miles of ones. If you can imagine that. It's just a number that's just absurd. At this point, in my opinion, you can thank Klaus Schwab and the WEF for publishing COVID-19, the Great Reset, to get Congress to spend in trillions instead of staying in their lane. They didn't. Matter of fact, no government did. Let's see, what do we have now? We have Henry. See? Here is Henry. Do you want to say something, Henry? Yeah, you do. Okay, so here's the cuteness of called Henry. And so let's go into the yen pairs now. Henry likes the yen pairs because I think we're going to make some money on those today. Let's see. I'm looking for a bounce somewhere around the 156, 158.35 level, possibly a little bit lower, 158.23 level. To see if it's going to bounce up above that today, but I'm going to sit on the markets and wait and see what happens. I'm going to look for a solid bottom on that before it starts taking off the other direction. That could be a 1 hour, could be at the 1 hour chart. Then I'm going to be looking for that. I'll be looking for that later on today. We'll see if that transpires. Again, this is what the an intervention looks like. And then we have the pound versus the yen right here. Come on, quit chirping a little bit. Quit biting my finger too. There we go. Where did you go? Okay. He can fly, I can't. But closing at Friday's close is 157.55 on the pound versus the yen, the dollar versus the yen. Pound versus the yen. Look at that weekly wick right there. That is a 588 pip decline, which is a huge, huge amount of outflow. That's the pound versus the yen. At 212.41. We've seen the 212 level a lot as a possible turnaround area. So if you're watching for that, we'll see what the open looks like in Tokyo around 9 o'clock New York time. And I wouldn't even consider getting into this until 9 o'clock to see what happens. Because whatever usually happens in the Sydney market, the exact opposite takes place in the Tokyo market. And this Tokyo market is bigger than the Sydney market. Sydney market, I think, opens at 7 o'clock-ish. New York time tonight. Euro versus the yen again. We're looking at a huge 487 pip decline on the last week. It's going to get it down to 181.41, which is right about this level. It's right about this support level right here. So we can I would expect to see that. Which is 2.36 level off the pivot point, which is a weekly pivot point, which is way down here at 174. After that, we have the Canadian versus the yen. Again, pivot point is way down here. A 109.98 level we haven't seen since November of 2025. But now we're revisiting an area we haven't seen since February of 2026. So it's erasing a lot of gains right here. However, this does give us the opportunity for a clawback like this one, and it eventually clawed back. But if you're not in the market now, you haven't lost anything. So you're, I sat out on this one. I started coming in around here on the pound versus the yen. I think 164.08 is where I did. And then I closed that trade out and did not go any higher. So I wanted to see if it was going to break 164. It never did. So I did not lose money on that. And I did the same thing on the pound versus the yen. I was trying to come in around and I don't think I actually ever placed that trade around 217, and it did not clear that either. So as a matter of fact, it started wobbling and then it collapsed. In fact, that may have been, well, I guess it was higher than that. It was 218.50. That's where I was trying to come in. 218.65. That rings a bell. But that never happened, so I didn't have to worry about it. So with that, Aussie versus the yen, down to 110.90, and it's looking like 110.08 might be the stopping point for it. So we'll see if it breaks through that a little bit. We're looking for a major turnaround around 108.79, 109-ish. That would be a good time to come in with a buy limit and make some money on that. So I would definitely watch these for bouncing because they always do. They always have. In the last couple of years, I've seen it. Every intervention has ended in a retrace. And I would love to get about a 600 pip retrace. That would make me very happy. So we'll see if that happens. I'll be very cautious about that too, because there will be pullbacks. It is not going to be a straight line event like anything else. It's going to be jumpy, and there are definitely going to be pullbacks. For example, another intervention shock, and then some more stuff going on, and then all of a sudden it just takes off and runs. So we'll see if that happens. All right. Let's get this to the NYMEX oil market. NYMEX oil is sitting at 84.67, which is a lot higher than anybody wants it. But, hey, it's kind of where we are thinking right now. Dollar versus the CAD. Again, kind of a bearish engulfing candle there. So I would not put any stock in a breakout on that one anytime soon, a bullish breakout. Going to watch to the downside on that one, especially depending on our activity with buying Japanese bonds and selling American bonds, which would be the way to keep the balance sheet clean. However, I don't know how that's going to work. That's above my pay grade. Dollar versus the Aussie versus the dollar. Right there. I'm not involved in, I do not have a job at the Fed. It's over 70. Broke over 70, so I might see a continuation of that. It's likely that there's going to be a continuation of that, depending on what happens with the DXY. With the dollar, US dollar. Gold, bottoming them out at, showing a strong bottom there at 4,043. So we'll see if that can continue into a higher range, which most likely will. I expect gold to turn around pretty soon, and all the precious metals really. Platinum, 1658. Palladium, as central banks realize what kind of a deep problem they have. We'll see what happens with that. And then silver, 57, often called poor man's gold. I've got a bunch of it right here. See, silver, actual silver, which is harder to sell, but hey, I like it. It's right there at 57.56. Again, right in its little comfort zone that it's experiencing, right above 55.8. So could probably expect to see that moving up a little bit more. As you see, the headline here is gold snaps a 4-month-long losing streak. So we could see some perking up in the silver markets, although that does look more like a bearish pennant flag than a regular one. Let's talk about software stocks real quickly. Software stocks the IGV had a big week last week, according to this. Up 1.36%. HubSpot, well, no, more than that. This is the weekly chart. These numbers are not weekly. Those are Friday's close. So we're up on HubSpot, up 32 pips. IGV is up 15 points, 6.6 points. HubSpot up 32 points. I'm looking at this number up here on that last candle, which is 32.7. Salesforce is up 12 points. Intuit is up 19 points. Wow. GoDaddy down 10 points. Nobody likes GoDaddy these days. Adobe is up an arm and a leg. It's up 25 points, so that's good for them. Upwork, not so much. Up 0.33 points. We still don't have the electricity numbers yet coming out of the St. Louis Fed, but it's I can give you a hint of what they are, going up. Let's go down here to the Mag 7, see what they did this past week. Mag 7, 2.8 up 2.8 points on the ETF. Google is up 36 points. Wow. Guess I'm not the only one that figured out they're going back to search as their main driver again. Amazon up $40 over the last week. That's crazy. And then we have Apple down $24. Meta, a lot of volatility here, off $38. Microsoft up $83. Probably that's got to be their best week since probably 2008. I think I read that they did have their best thing since 2008, best week. Nvidia off $6. Tesla off $1.8, and then SpaceX off $6. It's now under, it opened here at 130, I think, or 150. It's now trading well below that at 108, so that might be a buy, but it hasn't stopped falling yet. So I would not jump into that yet because it's not finished going down. So that's the thing about that. Also, something else we did not talk about yet that we need to talk about yet. Let's go back to here. tradingforexforprofit.com, go back to our public site and go to our calendar. We don't have Market Pulse yet since the markets are not open, so we'll not get a message, not get a thing on that. Sunday, we have a bank holiday in Australia. Good for them. Building permits coming out for the New Zealand. How much can you really build in New Zealand? But oh well. Let's see. We have the CPI, the Swiss CPI is coming out. Inflation information for Switzerland. Again, it's going to be pretty tame because they're Switzerland. And again, more CPI coming out there. No forecast on that, apparently. We need to work on that. Inflation rate for Switzerland. And as you can see, we're starting to get some better numbers in here and some better ideas of what's going on. However, we need a % sign at the back of that. So inflation rate is over month. It's looking at 0.5% in Switzerland. It's a little high on the high side for them, I think. Canada is also having a bank holiday on Monday because I don't even, because they're Canada, I guess. I don't know why. But they're having a bank holiday. Why not? US ISM manufacturing prices. This is going to be huge. We'll see what happens with that. We've got a forecast of 70. That sounds high to me, but maybe I'm wrong. I'm wrong a lot. Manufacturing PMI. Okay, this is what I'm talking about. Manufacturing PMI is looking at about 54. That's the number I'm thinking of, I think. Then ISM manufacturing employment is forecasted at 49.8. I think. I don't know if that's up or down, but it will. 50 is recessionary. And then the JOLTS job openings. You know what that means? NFPs this week. Forecast at 7.42 million job openings. We'll see. On Tuesday, employment change in New Zealand, and employment rate in New Zealand. Again, never mind. ADP non-employment, non-farm employment change is estimated at 71,000 jobs. We'll see if that change, how that looks. ISM services PMI at 54. That's also going to make this week a very, 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 should make it a very volatile trading week. So be very careful with that. Set your stops close is what I would do if you're going to trade. ISM non-manufacturing employment for the United States, also a big mover. And non-ISM services employment at 52. There's 52 people in, oh well. Let's see. Thursday, we've got Euro area, S&P Global Construction PMI. And then we have unemployment claims. It's a giant nothing burger and has been for 15 years. Continuing jobless claims. Oh, that's a new number. 17 at, I don't need to get some context into that, see what that number actually is. I think it's 1.798 million, maybe. Surely it's not 17 million. Then again, it could be. People sitting on the government dole. Initial jobless claims are going to be 199. Jobless claims 4-week average. Look at this. We got all sorts of new information coming out now. S&P Global Composite PMI at 49 is the estimate. That's for Canada. Consumer confidence coming out of Switzerland. Minus 36. Forecasted at minus 36. That's not good. That's not a good time to go to Switzerland. Or it's a great time for us to go to Switzerland and visit. Average hourly earnings, 0.3% for the United States is what we're looking at. Unemployment rate, we're forecasted at 4.2%. Employment change in Canada, and then unemployment rate in Canada, and then non-farm employment change in the United States. We're expecting it to be up 88 jobs. Then the ID PMI, so all sorts of fun information coming out on Monday. Now, pardon me, on Friday. And I'll get this changed. I'm going to work on this over the next week and get some context into this so we can see what these numbers actually are. Non-farm payrolls private. It's got to be more than 69. I'm thinking more like 69,000 or 69 million, something like that. Part-time employment change. This is just turning into a barrel of employment information. I like it. Manufacturing payrolls. Like that too. There are nine people are on the manufacturing payrolls. And this calendar has been brought to you by EURGBP. So that is going to be, that is also who drives our news feed now. So we've got the feed changed out to something that is a little bit better, as you can see. So I'd highly recommend, so come on in, jump in, start for free, and see if you like it. But in the meantime, that is all I've got for today. You guys have a great one. We're going to go out and do some shenanigans. Might have some shorts pulled up, which is really what people want to see, are the short little videos we put out, instead of all this boring economic stuff. But at any rate, we're going to go do some stuff. It is Sunday outside the house, outside the office, and I will see you later. You guys have a great one. Bye.